Hello, folks. Welcome to this episode of Rich Insights. I'm Don Rich. Today, we're talking about investing in currencies. We are talking about Forex. We are talking about the big dollar, the greenback. Why are we talking about that? Because it's all over the news right now. Right? The run-up in gold is due in part due to dollar weakness. Investors are thinking about going abroad due to dollar weakness. All right, we got to think about dollar weakness from a short-term perspective and a long-term perspective. They're both very interesting trades right now. Now, before we get started, though, let's talk about how do you trade currencies. It used to be difficult and expensive for individual investors, for retail investors to trade currencies. That's not true anymore. There are futures markets for a number of the currencies, and we have a whole series of ETFs where you can trade an individual currency in an ETF, or you can trade a basket of currencies against the dollar on the ETF. All right, that is what makes it interesting. Now, why should we be interested in this? The U.S. has some huge structural problems. The dollar weakness that we're seeing today is just a start. Just a start. The dollar is going to continue to weaken and likely weaken significantly over the coming years. So from a long-term perspective, you got to get your mind around it. If you haven't invested in currencies before, it's just like buying equities. Again, when we say you're long euros and short dollars, that's just like buying Tesla and paying for it in dollars. It's the exact same thing. You got to get your head around it. That's what we're talking about here. So we talked about from a long-term perspective, you got to get in the dollar short trade, the dollar weakness trade. What about from a short-term perspective? Long-term, you definitely want to be there. What about short-term? We hear a lot about dollar weakness today, but let's talk about where we're seeing it, and more specifically, where we're not. Let's start here with emerging market currencies, EMFX. And what you can see from this chart is, for the most part, the dollar has not, I repeat, boys and girls, it has not been weakening against emerging market currencies. There's only a few that have been appreciating. You can see the big one here is the Philippine peso. So the way to read this is if a U.S. investor bought Philippine equities, they would get the rate of return on those foreign equities, and they would add 4% to that return when they translate it back in dollars. At the other extreme is Brazil. If you're holding Brazilian equities, you're going to get crushed when you translate them back to dollars. 28.5%. Wow, that's like a tax. That's a huge tax coming at you. Turkey, the Turkish lira, next in line there, minus 20%. Okay, so what do we do with this information? There's two ways to look at it. One, we've seen broad-based, or we've seen some meaningful dollar weakness. And if emerging currencies cannot appreciate while the dollar is weakening, shit, that should tell you something, right? We got to be worried about that. Yeah, all right. So that's one way to look at that previous chart. The other way, the dollar weakness so far has been fairly narrow. It's been fairly confined. It's likely to broaden out a little bit over time. Now, when it comes to these emerging market currencies, there's a lot of areas in emerging markets that I want to avoid. There's some huge structural problems down here at the bottom. However, Mexico, the Mexican peso is not one of them. I actually think that's interesting. You might want to consider that. The South Korean won. That's another one that seems rather interesting to me right now. So there might be isolated pockets where you can start playing the dollar weakness and hoping that it continues to expand. But you do have to respect the fact that if they can't appreciate now, boy, that should be telling you something. So if the dollar is not weakening against emerging markets, what about the majors? Here we go with the majors. On top here we have Sweden, Switzerland, and the euro. Those are the ones that are appreciating. The European complex, right? The dollar weakness has largely been confined to the European complex. Down here at the bottom, what do we have? The commodity currencies, the Australian dollar, the Canadian dollar, Norway, New Zealand. These are all the commodity currencies. And they've done very little or weaken. Yes, I said weaken against the dollar. The other one here is sterling. Of course, they're going through Brexit. All right. Now, let's just talk about commodities for a second. I mentioned the commodity currencies, but the dollar weakness also affects commodities, right? Global or commodity prices globally are priced in dollars. So if the dollar is weak, that should push up commodity prices. And some commodities like copper are flying. They're going nuts because, in part, due to this dollar weakness. Other commodities like oil that aren't moving very much while the dollar is weak, you got to worry about them. You got to worry about them. So again, from a long-term perspective, you want to get on this weak dollar trade. It's not going away. Whether you play it long gold or you buy some currencies against the dollar, you got to get on that trade in some fashion because that's not going away. So that's a long run. What about the short run? Let's take a look here. We have the dollar basket here. It's called the DXY. The DXY as a currency basket is about 60% euros. All right, that's the bad thing about it. It's very concentrated. It's not a uniform basket. But since the dollar weakness has been confined to the European complex, it's kind of interesting right now. So we see that the dollar has weakened about 7.5% so far. 7.5%. And you got to say at the very least, it's probably going down here to the previous low. So it's probably looking at another 4.5%. That would get us down here. All right, again, on a short-term basis. But when I look at this dollar weakness here, what I see is damn near a straight line. A damn near a straight line. When I look at this move before here, across 2017 and into 18, this was about a 16.5% move against the dollar. But look at these gyrations in here. Look at the gyrations. It wasn't a one-way train. I think we're going to get one of those now. So if you're not in the dollar weakness trade yet, I'd probably advise sitting on the sideline, waiting for a while. Again, from a long-term perspective, you want to be there. Right? Hook your train up to that cart. Short-term perspective, you're probably going to get better entry points. Why is the fat guy saying that? Well, we look at euro positioning here on the futures market. This information comes out weekly. Each week, the damn chart just keeps going higher and higher and higher. Right? We are in nosebleed territory right now. Everybody and their brother are in the dollar trade right now. Now, when we get too far positioned on one side, of course, what happens? Then you tend to get a squeeze. The short-term investors, the momentum investors, then will have to sell their euros. When they get squeezed, they'll have to sell their euros, buy dollars, and that will give you your entry point. All right? That's something to think about. But again, on a long-term basis, the U.S. has these tremendous structural problems that are going to continue to weaken the currency. What are those structural problems? They're twofold. They're called the twin deficits. The current account deficit means we import more than we export. We have for years. We continue. There seems to be no end in sight on that. The second thing is the budget deficit. Each year for years and years and years, we spend more than we make. You can't keep doing that. We're not the only one doing it. You know, another prime example is Turkey. Right? And they're going to blow up long before the U.S. is. But no country, it's been tried several times before. It's never worked. Your currency always collapses. The dollar will get weaker and weaker over time. The currency will collapse, and eventually we should get some signs of inflation from it. So on a long-term perspective, you want to be on the dollar weakness trade. On a short-term perspective, you're probably going to get some better entry points. Okay, so if you enjoyed the video today, hey, help a fat guy out if you would, all right? Please subscribe to my YouTube channel. It's called Rich Insights. Or you can go on LinkedIn. We do a number of posts every day on LinkedIn. They're called Fat Stackonomics, right? You probably enjoy those as well. All right, I'm Don Rich, and that's our message for today. I hope you enjoyed it. May your beer be colder than the company you keep. We'll talk again soon. Thank you.